Legends, welcome. Legends, welcome to the Daily Buyer Show, where we dig all charts as they relate to crypto. Hope you're well wherever you are. It's the 22nd of December here down under. It's probably still the 21st Sunday evening if you're in most parts of the world. It's a late one for the UK. If you're joining us from the UK, thank you. I know it's probably midnight. You probably just ticked over on midnight as well. So hope you're all well. Disclaimer, I'm not a financial advisor. This is not financial advice. I'm just giving you my view of the markets for educational purposes. Hope your legends are all well. The week ahead, well, the week that's just started for me, we're coming into Christmas week. So, when I look at markets for this week, I know it's thin liquidity. We're probably going into thin liquidity. Most of the bigger players, the funds, the desks are probably wrapped up for the year. I don't think any strategic positioning. I think for Q4 and the year itself, 2025, probably all the strategic positioning's already wrapped up. And going into 2026 or Q1, I don't think there's any major moves that happen from now till round about first or second week of Jan that we can really trust or rely on as directional moves or strategic positioning into the new year, into Q1. So we'll just talk about that. It'll be a shorter stream. As you guys know, on a Monday, my Monday, I put out my Substack with my full weekly market update. I will have that out later today, okay? And the Wall Street hasn't opened yet for the week, obviously, but we've got the futures market open. So we'll dig around the charts, but we're going to focus more on crypto and what I'm kind of looking at for the week ahead and how I'm kind of approaching the markets over the next 2 to 4 weeks. Okay, so if we just start on where we're at in terms of net liquidity, we've started to see this slight uptick, right, in net liquidity. And if you've been with me on the channel and you've seen my previous posts or you've been keeping up with me on X or you've caught previous streams, you know that I look at net liquidity as the directional driver on the crypto markets, because crypto functions and Bitcoin functions or trades, I should say, as a risk asset. So if you just observe liquidity and you see when we have these expanding phases of liquidity, right, that's when Bitcoin has its major expansions, okay, and price discovery phases. Now, we've been in a declining liquidity environment, so we've been quite tight for many months now, and we've seen that Bitcoin's already turned over, is macro bearish, okay? The weekly structure's bearish, the daily structure's bearish, and liquidity has been tight. We've been in a relatively tight liquidity market environment, I should say. And when we just look at the trajectory of liquidity going into 2026, we do have some catalysts, and we're seeing a slight uptick, okay? But we don't yet have, in my opinion, the formula of previous expansion liquidity phases. We don't have that recipe that's going to drive significant liquidity into markets, okay? So in these historical phases, it was the Fed increasing their balance sheet, right? It's driven by money printing, where the Fed's aggressively increasing the balance sheet whilst aggressively cutting rates to stimulate risk appetite. You see this orange line is the federal funds rate, okay, which stimulates risk appetite by making capital cheap while they're aggressively expanding the balance sheet, while the government is spending money, okay, and that's what net liquidity ultimately tracks. It's the balance sheet of the Fed, the government's wallet, whether they're spending or draining, and the reverse repo market to see whether banks are parking money with the Fed, or they're actually have risk appetite and deploying it, right? So hence, we're not in this environment where in the past has been conducive to massive bull markets or parabolas. We're in a tighter liquidity environment. The trajectory for liquidity into 2026, or I should say the trajectory for rates, okay, is still quite high. We're expecting the next rate cut in March, then only one more rate cut for the year, and that still keeps us at a relatively high rate environment, right? So with the two cuts, that brings us potentially down to here, which is still higher than where we started, where before the last bull market started, right? So it's still, even with the trajectory of rates, we're heading still to a high rate environment, as well as liquidity being tight. We don't have the Fed signaling major balance sheet expansion. Okay, they're doing kind of more dribs and drabs at the moment. So my thesis is, going into 2026, Bitcoin's already turned and we're in a macro bear market. Okay, we're in a macro downtrend, and typically in these weekly, when Bitcoin turns over on the weekly structures, that is a major trend shift. It only does that when it's shifting from bull market to bear market. Now, I don't know how long this bear market will last, and I use the term bear market because, again, of the way that I look at price action and how price behaves in a bull market versus a bear market, and Bitcoin's price is now aligned to how it historically behaves in a bear market rather than a bull market, okay? But I don't know how long the bear market will last, and if the structures shift and price action turns over and starts behaving like what it does in a bull market, then I'll call it a bull market, right? So that's the beauty of trading. And being a trader is, you got to be willing to change your bias, okay, when you see the specific things in your system, your strategy, in the price action that requires you to change your bias, okay? And that's what I do. So hence, when I approach the markets right now, what I'm thinking about is the Fed trajectory, the current trajectory, and what we're seeing in the data isn't conducive to a bull market environment where we're going to hit new price discovery parabolas and we're going to go into new price discovery, new all-time highs, okay? It's more conducive to a bear market environment where any rallies are likely counter-trend rallies that are going to resolve lower. Now, that can change if the Fed changes its trajectory, okay? And if the Fed moves to a more aggressive approach, either in rate cutting, which will stimulate risk appetite, okay? Because as they cut rates, it makes money cheaper, makes borrowing cheaper, okay? Or QE, okay? If they start ramping up their QE efforts and printing more, that could stimulate more liquidity into the system, okay? And if they do both, well, that is what the historical recipe is for massive new parabolas. So as it stands, unless we see a trajectory change from the Fed and then we see it in the data, or vice versa, right? Unless we see it in the data or see it from the Fed unfolding, I'm not expecting Bitcoin to behave like it's in a bull market, because the environment and the conditions are not that of a bull market. So, and the structure already tells us that we're in a bear market. So hence, I will follow the signals in the price action, and that's what the price action tells me. Okay, so that's I guess just wanted to lay out my context as we kind of approach the end of the year and then positioning into early next year. All right, so let's go around the grounds. We'll just jump straight into some of the markets that have opened already. We've got the DEXI that we're tracking, right? Where we're watching this first and foremost, we've got the historical cycle ending pattern that is in play at the moment. So the DXY bases then starts its macro bullish trend, and that's been present in the last 2 crypto cycles, okay? And you can see, and that is what coincides with the bear market, okay? And that's what a bear market typically looks like. So hence we're still tracking that pattern because we are seeing the basing, we are seeing potentially the development of a a bullish structure, a macro bullish trend. So what we've been tracking here is to confirm the pattern. We've got this range that I've highlighted, and if we see price trending up on the weekly structure, okay, so we get this weekly follow through up above here with the bands turning green, the weekly bands. Now these are just some 1221 EMAs that I use across markets. If you want these, just DM me on X and I'll send you I'll link you to the indicator completely free. Okay, if we see this trending above here on the weekly along with the bands confirming green, then this is exactly what we've seen in the past, leading into deep bear markets. And it's likely that it won't just be a bear market for crypto if this is happening. It's likely a bear market for the traditional indices as well. So the SPX, the NDX, and the RTY. Okay, so hence we've got this on watch at the moment. And again, if you've been keeping up with the streams, you know that we've been tracking this FOMC level over the past, since the FOMC, because this essentially tells us how the market is responding to the Fed's gesture of cutting rates. Now, considering that they cut rates, usually what we'd want to see if the market is accepting that gesture to take on risk is a weakening dollar. Okay, now some of this weakening may have been offset in the fact that I think the UK cut rates last week. The Bank of Japan hiked rates. The EU stayed flat. So some of this weakening may have been mitigated, but hence I'm still just tracking this level because in the short term it's a bit of a barometer for me. Where if we're trading above the level, that means the dollar is increasing in strength. Okay, and if the dollar's increasing in strength, it typically means that the bid is not going into risk assets. However, this is kind of the zone where I'm just observing, because we could come up into here with then move back down to here, and any move down like this, I think that's ultimately our play zone, where this could support a risk bid, but we'd also just have to be analyzing why the dollar is losing strength. It's not as simple as saying DXY down, risk up, because it really, for me, it comes down to 2 things when I look at when the DEX is moving. Is it moving because participants are looking to take on risk and have risk appetite? They're chasing better returns? Or is it moving because of potential loss of faith or confidence in the US economy, right? Because if the DEX is going down like this, okay, and there are recession concerns or economic concerns like we saw in 2007, okay, that means that the DXY can be coming down with risk markets. So that's just something to be consider. Hence, I think why this area is that play zone where it could support the risk bid, at least in the short term. And that's where, if I see that kind of move, I'd be more inclined to consider that if crypto is also looking bullish, then that's potentially the counter trend rally that's potentially in formation, right? Because remember, crypto is macro bearish, but even in a bear market or in a bearish trend, you're still going to have retraces, which are counter trend rallies, to which will ultimately resolve lower, right? So we'll talk about that in a moment. But hence the DEX is on watch. Okay, we've been keeping an eye on the USD JPY, and that's primarily because we want to, for me, this is my barometer on the carry trade. Okay, so if the carry trade is at risk, we should see the yen strengthening. Hence, USD JPY should be coming down aggressively, because that suggests that with the yen strengthening, capital could be flowing back into the yen. Hence, could be signs of stress or concern with the carry trade. But at this point in time, no concerns, right? We'll keep this on watch. Now, most importantly, for right now, I believe, let's take a look at the indices, because what I potentially think we might be in store for, or what might guide us over the next 2 to 4 weeks, because I guess we're all kind of thinking right now, do we get a Santa rally as we seasonally do? Do we not? I guess that's the big question, Santa rally or not, or something else coming into the year's end. So I'd kind of preface what I'm about to say first with, remember we discussed the fact that most of the bigger players' books are probably closed already. So we're going to be operating on thin liquidity. So whatever rallies that take place, I'm not mistaking them, or I don't want to confuse them with direction being set. It could just be a thin liquidity, range bound, or just a liquidity hunt like environment where these moves most likely are to be faded, or are likely just short-term moves, right, off thin liquidity. I don't think we're going to get true direction until probably second week of Jan. But what I'm looking at right now is the indices, because we've been in this concern zone where we tested structure lows. Okay, this is the DJI, for example, just the futures, because the futures is open. We tested structure lows here. I'll come back to the actual spot chart, right? We tested the structure lows down here. And I said these bigger distributions can take time to play out, where we come back up into the highs a few times before actually rolling over. So this is on watch. So what we want to see for strength is obviously for this to keep just trending up and to break structure. But again, we're watching the FOMC level as our short-term barometer, because if the FOMC level is capping price, that's telling us that despite the Fed cutting rates, the markets are still rejecting the gesture to take on risk, and they're going risk off. Okay, so this FOMC level across the SPX, the DJI, the NDX, and the RTY is where I'm analyzing that barometer. So this week, as we come into Christmas, or ideally within the next few days, if we're getting above that level, we're seeing rallies, that for me is the signal I'll be looking for in the short term to suggest that crypto is also setting up now for a potential counter trend rally. Okay, so hence I'm watching these indices closely, and I've got the FOMC level marked on my chart across all these major indices. And futures, it's just opened. The opens, quite often you fade the open, right? You want to see how it's trading into the close. But we've opened green, and I want to see these just continue with strength. That would be the most bullish signal that we can get, that we could potentially relate to crypto setting up for that counter trend rally, right? So you want to see these just charging up, and ideally not sweeping the highs, right? Because that's what happens in these bigger distributions. We want to see strong closes above the highs and not mucking around for too long at the highs. Okay, so these are on watch. RTY, similar story, right? They're on watch. So let's jump into crypto now. Okay, so we had the weekly close. So let's just jump back out and start on the weekly. Okay. Now, I'll turn these off so we can just start with a clean chart and just take a look at it. So what do we have, right? We had, leading up to FOMC, we had the inside-outside bar candles, which showed us that neither side of the market was taking control. Not strong decisional direction set here. And then we had, then we had the candle, the FOMC week candle close as a sweep of the highs. So that told us that in the short term, at least in the short term, the bears were taking control again. Okay, because the bulls tried to push higher post FOMC or during FOMC even this week. They failed and the bears took control. They failed to push the market higher. Okay, so in the short term, that suggested the bears had stepped in. Okay, so what did the bears do last week? Well, it looks like the bears took an attempt to take price lower, which is now resolved in the sweep of the lows, right? And you can see here, right? Let's just turn on volume. Let's see what we're seeing in the volume. It looks like we're heading into, as expected, like you see the volume in these weeks dipping off since this sell-off and what looks like a potential, well, we don't know if that's a capitulation low yet. I mean, look, it had some decent volume come in on that daily low, so that could be the basis of a decent low, okay? But you can see volumes dipping off as we come into this end of the year, and we're coming into thin liquidity, right? So this is kind of expected. So hence here, I don't really have a strong bias either way at this point in time. Now, obviously my macro bias is bearish, right? Okay. But we're just talking about week by week now and what the candles are signaling, because considering the weekly bias is bearish, okay, for price to keep moving down like this in a bearish trend, you anticipate that the next move is a lower high to move for continuation. Like that's what the continuation trade is for on the weekly chart, right? So essentially what we're trying to determine now is we've got our 2 consecutive bullish weeks. So for me in my system, this is now validated as a structure high. If we come down and touch this low, this will be a valid structure high because I've seen 2 consecutive bullish weeks in a row, okay? So that means this will be the structure high if we come down and touch this low, okay? So it means that this could potentially drive continuation, right? This could be the next weekly high in development to drive continuation. It would be an acceptable high in my system and how I read market structure. If you want to know how I read market structure, just go into my building block series, and I've got videos in there on exactly how I look at market structure, because you know there are obviously nuances in the way that each person might anticipate or read market structure. So you'll see how I do it there. So hence, right, this is the weekly range that we're in. Bears took control here, right? But bulls are stepping in some way, shape or form, okay? So what does this all mean? Like it's chop coming into thin liquidity, right? We're coming into year's end, thin liquidity. Big players are probably on holidays, right? So there's not really much to sink your teeth in on there. Now, what I'm looking at as we approach, you know, Q4 close, start of Q1, start of 2026, I'm most interested in these higher time frames, these big strategic time frames, right? So the monthly, the quarterly, okay, when this quarter closes, and as long as you're with me on the streams, you know, you're here with me on the channel, we'll be calling this as we go. But as the quarter closes and the year closes, this quarterly low will be very important, right? And we'll be watching how price interacts with that low coming into the new year to see what signals we gather and what direction may be getting set in the monthly, in the quarterly, and early signals on the yearly, right? But this is where I look at this monthly. This is what looks more appealing to me and more interesting, because we've potentially got the development of an inside bar for December. Okay, so inside bars represent some type of compression or consolidation. Okay, and what I'm observing when I see the inside bar is that when the following month starts, who takes control of the market, right? So what I mean by that is I'll be observing the extremes of the inside bar, the highs and the lows, because if I see come January, if this December closes as an inside bar, come January, if we get a sweep of December lows, okay, and better yet, an even more powerful signal for me would be a sweep of December lows and November lows, okay, which will also end up being early in the quarter a sweep of Q3 lows. Well, then we've potentially got a setup here to run at least into some of these levels up here, okay, by way of, at this stage, I'd just be looking at it as a counter trend because the current trend is bearish, and that could be the development of the next weekly structure where, you know, we may be chopping around for the rest of December. Come start of Jan, we come in and sweep December lows, sweep November lows, which is also then sweeping Q3 lows, recover, right? And if these are weekly sweeps, right, like we see here, we see that's failure for sellers to push the market lower and buyers potentially stepping in. That potentially sets up a move at least into these highs here. And now if I just put back onto the chart my flip zone, right, my major flip zone, that potentially sets up a move potentially into here, okay, and maybe up into reclaiming the weekly bands here, right, and that could then be the bigger lower high, okay, or next structure high to be observing if we're going to move lower, or if structure is shifting, because this will be a valid weekly structure shift, whether we're going to come back into the range for a weekly lower high to move back up again. Now, obviously, for this kind of move to play out, where the structure is shifting, for me, I'll be looking at the broader markets and the liquidity picture, because unless we get the liquidity picture improving, so you know, that shift in the Fed's approach to potentially rates, QE, or we're seeing in net liquidity that the liquidity is increasing, right? We see this supporting that kind of move by going up, then that's where I'll have more faith or more confidence, or build, essentially this builds as a higher probability case to move back into a proper structure shift and bullish structure again, okay? But, you know, that's where my speculation ends, right? That's where we plan and think about the potential moves and levels, most importantly, like how I've pointed out, the monthly and the quarterly level as we're coming into year's end, okay? That's how we plan around those levels, but as price action unfolds, we'll need to analyze the price action and the market conditions at that time, okay? But those are the bigger levels that I'd be looking for right now as we come into the year's end and the month's end. Now, let's just jump into the daily and just take a look at how that's unfolding. Okay, we've got this daily internal range developing where we've got now a confirmed low. This was the last structure high. This is the current internal highs. Now, this is what I call a complex pullback. If you want to know what I consider a complex pullback and what it means, what I believe it means in the market and what kind of trades or how to position or how to approach these complex pullbacks, go into my building block series and there's videos specifically done on these. Now, when I see these complex pullbacks, ultimately this means that price is going to take longer to do whatever it has to do next, whether that's develop into bullish structure or redistribute, okay, for the move lower. At the very least, it's going to take longer. and it potentially means we're in for some chop or some range in the time being. So again, we've got our FOMC level here, right? Where I am still leaning bearish, at least even in the short term now, because we're below this level, right? Rejections into here means we potentially come down to here. The only longs that I'm interested in at this point in time, like, is down at this level. I want to see us down here before I'm interested in anything on the long side. And make no mistake, that's that would be a counter trend setup, right? But here into the FOMC level, I believe that the sell side's still in control. Above the FOMC level, at least in the short term, I'll be analyzing price action to understand if buyers are potentially stepping in, if the demand side's taking control and wants to push us a bit higher. I'm not jumping in bullish automatically up here, because this is also the range high, right? This is where you want to be short, okay, when you're trading the range. So I won't be jumping bullish up here, but I will just be pausing before I blindly or aggressively jump into shorts, just to assess the broader environment and what's happening, because I just want to know if bulls potentially going to push this up further before coming back down, or if something else is playing out. But in the short term, I don't really see any reason to be bullish here below this FOMC level. And this is purely in the short term, because I'm macro bearish. Sellers are still in control. And not until we get down into these levels or down here would I even consider trading counter trend. Okay, and that's just me, obviously, and how I'm looking at the market currently. Now let me just clean up the chart. Last thing we'll finish up on for the stream is we'll just take a look at our favorite chart, which is stablecoin dominance. Okay, now this is one of the most important crypto charts, right? You have to understand this chart if you're trading, investing, or participating in crypto in some way, okay? Because this chart is ultimately telling you whether crypto participants are putting their money in crypto tokens or they're taking their money out and putting them into stable coins, okay? And what happens, again, if you use my weekly bands, right? I give these bands away for free. Please just DM me if you want these bands. They're a game changer. And go to my indicators series, and I explain exactly how I use them and how they work well, especially on Bitcoin and across crypto. Just jump in there and have a look at that video, and just DM me on X if you want these bands. They're free, right? All my indicators that I use, I give away for free, right? So what you see here on the stable dominance chart is when stable dominance is bullish and when it's moving in weekly bullish structure with confirmed bands that are green, confirming the bullish structure, right? That typically means we're heading risk off and into a bear market. Like, this was the big bear market of 2022, okay? And then when you see the inverse happening, the bands flip to bearish and you see the structure turn over, okay? This is when we're heading into bull markets. Now, this is the exact chart along with Bitcoin's price action, but this is the exact chart that helped me time my entries into Bitcoin during January to April in 2023 and time my macro exits through January of this year. So January in 2025, I started the bulk of my exits. And then I finished the bulk of my exits around September, which is all through here, okay, when we were flipping over again. Now, what this chart is telling us right now is we've already got confirmation through weekly structure that it's bullish and the weekly bands. And now we're breaking out, or we're attempting to break out at this major trend level, which in the past, when we broke out from this level, signaled we're going into a much deeper bear market. Okay, so this is the main thing you need to understand right now, is that if this continues trending higher, we are going into a deeper bear market and Bitcoin and altcoins will go much lower, okay? In the short term, if we see it turn over, that supports liquidity, internal crypto liquidity flowing into markets, which at this stage supports counter trend rallies, okay? So this is another chart I constantly cross-reference to aid with my timing on both my trading and my investing. From the investment side, more on the timing of the macro cycle and positioning from a spot perspective into my bigger positions and bigger bags. And on the trading side, on the lower time frames, I'm looking at when these moves are coming into supports, and supports is where you want to go, where you want to be taking profits. And resistances, and this is obviously looking at the Bitcoin chart as well and observing what Bitcoin's price action is doing. But when you get an alignment of bullish price action or reversal signals coming in to suggest some bullish price action while this chart's at resistances, that's the best place to be positioning. And when you get this chart coming into supports, like say for example it comes down to here and you see it building supports, okay, that's telling you that if you're in positions, you want to be looking to take your profits on positions, because if this is support to then turn back up, it means that the market is moving back into stable coins and out of crypto tokens, okay? So that's the main thing you need to be tracking on stablecoin dominance and how to use this chart. Legends, will wrap it up there. I hope you got something out of this. I will do a post on X in the next few hours, just summarizing my approach and take on the markets specifically over the next 4 weeks as we come into year end, quarter end, positioning into Q1, you know, desks returning, all that sort of stuff. So just keep up with me on X if you're not there already. I'm Trav B Crypto. Please like, please subscribe to my YouTube channel here, drop a comment. That's what really helps me in the channel. I appreciate you being here. I hope you're well. I hope you have a good Christmas or holiday season coming into the year's end. And, you know, I don't plan to stop streaming at any time. I plan to be here daily at the Bitcoin close. So I'll be back again tomorrow and look forward to chatting to you again then. Thanks, legends.